Hello, guys. This is me again. We are back to the business of making you richer by showing you good stocks to put your money in. Today, our stock of interest is Advanced Micro. My name is Joseph Oji. Welcome to my program, Stock Analysis Simplified. So, like I said, my goal, as is always, is to make you richer by showing you, make you get richer by showing you the right stock to put your money in. And you do that by following the results of my fundamental analysis here. The good news is that you don't have to do any math. The math is already done for you. Just listen to me, and I will show you how it works. So, as we all know, the Advanced Micro Devices, which has a trading symbol AMD, is an American company. It's a multinational company, as a matter of fact. They make semiconductors, and they are based in Santa Clara, California. So basically, what Advanced Micro does is to develop computer processors. You know, the processors that computers use. So, and other related technologies for the business and for consumer markets. You can see some of the processors they make, so that's what they do. Let me put it that way. They make processors, and then they that the computers use, and other things that the computer needs to operate efficiently. So it's also a popular company. Many people, I know many of you may not have heard of Advanced Micro before. But anyway, there are so many companies in the stock market. So I hope you are seeing my screen. This company, my analysis will be based on this Advanced Micro, will be based on, as is usual, 3 areas I'll be covering. Yeah, 3 areas. Those 3 areas will be, first one will be stock balance sheet. Then next one will be income statement and the cash flow statement. Okay. And the third one will be general stock information. And I'm going to begin with I'll begin with the general stock information, and I will go from there. So Advanced Micro Devices Incorporated, guys, that's our stock of the day. Remember, we have not picked it yet, but we just have to analyze it first, and then we can then pick it up. So again, let's do this by getting our information from where it's located free of charge in Yahoo Finance. Let's go right there. So Advanced Micro Devices Incorporated, we're gonna get the information by typing the trading symbol here. The trading symbol is AMD. So I'm typing AMD. You can see the Advanced Micro System is showing up right now. I'm gonna click on it. So as of today, Advanced Micro Devices is trading. I mean, when I say trading, the stock price is $128.02 per share, and it's positive. Let us look at, like I said, I'm going to begin with this general stock information. So the general stock information I'm going to use is to show you the trend. So to do that, I'm going to open the chart for Advanced Micro. So you can see that it is up and down like most stocks are, erratic up and down. So to make sense of this, I'm gonna insert a 200-day moving average. So I'm gonna go to the indicators and then put on the moving average. I'm gonna choose 200 days. Why am I using a longer period? Because I recommend long-term investing. Buy it, hold it, for a year or two, a year, 2 years or 5 years, then sell it when it rises. So I have inserted the moving average for Advanced Micro Incorporated. You can see from the screen that the trend line, you can see the trend line right there. That is the 200-day moving average. See? Advanced Micro is actually trades. See the stock price right here. This is the moving average. You can see that it shows an upward trend from 2019 to 2023 and beyond. It's showing it had been trending up, which means that this stock the value is growing every year, and it is trending above the actual stock price movement. Show that it is actually trading above its $200-day moving average, which is a good sign. So that means the value is continuing to increase, unless something adverse event happen. Now, if I put it on in a 2-year trading moving average, see, if I change the moving average to trend to 2 years from 2022 and above, you can see 2022, 2023 and beyond. You can see it is still trading above the 200-day moving average, and you can see the trend line going up. So, okay, that is the first analysis. Now, the second thing we need to do is to go back and do the other fundamental analysis based on the information we have here. So I'm going to take you back. So to do that, I'm going to look at the statistics of Advanced Micro. So we're going to look at all this information. Remember, the analysis we'll be doing now is based on the fiscal year from 2022 to 2023, the performance of this stock during that period, December 31, 2022 to September 29, 2023. Now, I'm going to do, from what the trading 200-day moving average showed us, it is trending up. So I'm going to look at some of the key statistics that I use for analyzing stocks here, and I'll show you and explain to you what it means. The first thing we're looking at is the profitability for this company. The profitability, okay? How profitable is the stock? Now look at the profit margin. It is 0.94%. So Advanced Micro Devices profit margin of 0.94% indicate that the company returns approximately 94 cents in profit for every dollar of revenue. Every dollar of revenue, it retains 94 cents of profit. Not too bad. It's still good. So while this margin is relatively low, it is important to consider the industry standards that the company belongs to, industry that the company belongs to. Because semiconductors manufacturing normally tends to have lower profit margin. So those that make that in that industry, they know that semiconductor manufacturing, which is basically where semiconductor, part of the things that involve in the process of making microprocessors and chips, you know. Now, another one is this. So they know that the those in that industry know that industry have lower profit margins compared to other industries. Okay. Now we can look at the operating margin. You can see they wrote it as operating margin TTM. What does that mean? It means that for the Advanced Micro devices, this 3.86% operating margin, it means that the company is efficient in managing its operating expenses, but it is still relatively low compared to some of its competitors. Okay, so at this point we're ready to look at the management effectiveness. So the first item we look at is the return on asset TTM. So that one says that the Advanced Micro Devices return on asset is negative 8%, negative 0.08%. And this indicates that the company is not effectively generating profit. You can see like negative 0.08%. So it's not really, many companies have been like that, especially if they are investing in assets, if they're making a lot of capital expenditure. Like Amazon was that for years before they started making profit. The same thing with Uber was for years they haven't made they were not making profit until later. I think this year they started making profit. Anyway, like I said, you don't rely on only one metric. Let's look at other metrics. Okay, so but in any case, the return on asset of negative 0.08% mean that advanced micro devices is not effectively generating profit from its assets. So why? Because a negative return on assets suggests that the company is not utilizing its assets efficiently to generate returns for shareholders. Now let's look at next one, which is return on equity of 0.38%. Well, let's see. Actually, it's low, relatively low, and it shows that the company's shareholders are earning a modest return on their equity investment. So now let's look at the income statement. 22.11 billion of revenue. Well, that means that Advanced Micro, this revenue value is significant, as you know, because it shows that basically it shows a significant growth in revenue compared to what they have the previous year of 2022. Now, they will have revenue, the net income. So I'm going to leave this too, because the one I'm interested in is the net income. What do you have from that revenue of 22.1 billion? What profit do you have? What net profit? And you know that net income is a fancy name for net profit. So the net income of $208 million, resulting into a diluted earning per share. See the earning per share of 12 cents. 12 cents per share. Well, what does it tell us? It means that this net income of 208 million that result to 12 cents per share means that while Advanced Micro Devices is generating while it is generating a revenue, its net income is relatively low, and this may raise concern for long-term investors. Yeah. So now we have next is the look at the balance sheet. Under the balance sheet, we'll be looking at two items. Total cash, 5.78 billion. So the Advanced Micro with the total cash of 5.78 billion, they have a healthy balance sheet of that amount, and they also have a total debt of 2.86 billion. In general, let me put it this way: Advanced Micro Devices have a healthy balance sheet with $5.78 billion in total cash and 2.86 billion in total debt. So the current ratio of these two amounts give us a current ratio of 2.19. 2.19. So which means that the Advanced Micro Devices has enough short-term assets to cover their liabilities. So what it means here that for each $1 of debt they have $2.19 to take care of it. So this is very important. If a company can take care of their debt, that means they can invest. They have money to invest. They can get more money to invest in new product projects and make even more money, even as much as the profit margin is low. But they have enough money to do more profitable projects that will bring in more cash flow. Okay, I always look at the debt, current ratio, always, because a company might have a good profit, making good profit, paying their shareholders a lot of money, but 6 months later they are out of business. Why? Because they cannot meet up their debts, their day-to-day. They can't pay their investors. Their debtors. So their lenders. To say, which means that they cannot get more money if a new opportunity comes out, like the way that artificial intelligence, ChatGPT just came out. They won't have enough money to take advantage of these new opportunities. because they have too much debt that they cannot pay, and banks are not willing to give them more money. So that means they will miss the competition. So, with this healthy debt current ratio, that is good in my book. Now we look at the debt to total debt to equity ratio of 5.21%. So, which this means that this indicates a moderate level of leverage, which is very acceptable for a technology company. See, total debt to equity of 5.21%. Every technology company that have this value for total debt to equity ratio is acceptable. Now, looking at the cash flow statement, you can see that we have operating cash flow of 1.85 billion and the leverage-free cash flow of 2.76 billion. So Advanced Micro Devices has generated 1.85 billion in operating cash flow and 2.76 billion in levered-free cash flow, which demonstrates that it has the ability to generate cash from its operations. Okay. Now we have the next thing is what is your decision when it comes to Advanced Micro? What is your decision? Well, you can see everything we see we found here, we explained here so far, tell us both the positive side and the negative side of the company. But you know that in general, the Advanced Micro financial statement showed mixed results. So they showed the mixed results, but the debt ratio is good, and the moving average is good, and other good things I mentioned about the company. While the company has been growing its revenue and has a strong balance sheet, its profitability metrics are relatively low. So the negative ROA and the moderate return on equity indicate that the company may not be as effective as at utilizing their assets to generate return for shareholders. But in general, the decision to invest, of course, is to buy and hold should consider the long-term growth of the company. And the competition and the company's ability to improve its profitability. So it is important to monitor the industry and company regularly to stay informed about any significant development that could impact the company's stock price. But in if the final assessment of Advanced Micro, especially if you are a long-term investor, given what you have seen so far and the trend moving average, of course, you have the positive side and negative side. But in general, if you're a long-term investor, I would say that the company, it might not be something that grow very fast. But if you're a long-term investor, based on what we have so far, it has a moving average, but based on what the moving average showed us as well, and many other factors that we have seen, the good side, the bad side, I would say for this company and for long-term investors, what is the best decision? Well, it's a technology company. It can pay its debt, which is very important. But the only place that we have a small problem is the profitability section, which can improve. Amazon improved, Uber improved. So many companies that are growing improved, so long as they are making positive investments that will bring future cash flow. And that is what this company is doing. So my general assessment is to buy, but be ready to hold the stock for at least 5 years. On what I see, it's going to appreciate. Thank you for listening, guys, and I hope you enjoy my lecture, and I will see you tomorrow. Tomorrow, our next talk is going to be Meta. Used to be called Facebook, but they call it Meta now. That'll be our next talk for tomorrow. And then you guys enjoy your weekend, and thank you for listening. Bye-bye.